Amanda again with Infuse Insurance, here to help you get a better understanding of insurance. Today I'm sitting down with our resident experts, Danny and Kevin. In today's video, we're going to talk about something you may not want to talk about. However, it's absolutely necessary. Today, you are going to become an expert on life insurance. I promise you, this video is going to be a jewel to you, and by the end of this, you'll be able to not only understand it, but share it with your friends and family so that they can understand it as well. Stay tuned. Hi guys, so life insurance, when should I buy it? Kevin?
Well, the simplest, easiest answer to that is before it's too late.
And oftentimes don't think it's bad. Before it's too late doesn't always mean when somebody's passing away. It could mean when you have an event in your life that makes you uninsurable, such as a second heart attack, or you were diagnosed with some form of cancer or something like that, that makes it much, much more difficult to obtain life insurance at all.
Right, well that makes a lot of sense.
Right, and also life insurance is an age-based product. So the younger you are, the less expensive it becomes. And once somebody becomes quite a bit older, especially into their 60s and 70s, life insurance can become substantially more expensive. It's never as cheap as it is. I have 2 children and I bought permanent life insurance policies on them when they were young. I bought life insurance in my mid-30s, but I bought a larger face amount and a term policy that lasted me until my mid-60s. You buy the same exact policy that I bought in my mid-30s in your mid-50s, and it may be 250, 300% of the amount that I bought and I paid for in my mid-30s.
Wow, who knew? So if you're buying life insurance, the best time is maybe a little bit younger than you would think, just due to the fact that as we age, we may experience more illnesses, more diseases, become uninsurable, and we're going to get cheaper and more valuable premiums.
But don't think that it's ever really too late. If you are normally under the age of 80, we have a product that would be available for you for most people that are out there. It's just that if you wanted it to be as affordable as possible, getting it earlier helps. Oftentimes we think of the young couple that's getting ready to purchase a home. Sometimes in today's world, it's not just done with one income. Both people going into this new relationship, into this new home purchase, are working to make those bills. What happens if one or both of them or something happens? What happens to my house if my wife can't afford now to pay that house payment? So sometimes you have to have life insurance to offset that. Because there's a lot of other things that you really got to think about when somebody passes away. If I was to pass away, my wife and I was to pass away, before that property would pass to our children, it has to go through a legal process called probate. And anytime you're dealing with the government and anything, things tend to become very, very slow. Life insurance is not subject to probate. So, and it's not subject to taxes, it's not subject to estate taxes. It basically, you get a death benefit, you get a death certificate, and then the beneficiary is going to receive a check. So if I wanted my children to be able to maintain my property, to maintain my business, to be able to keep the cars and be able to pay for college, to be able to pay for all those things, life insurance is the easy, most affordable, most effective answer to all of those problems. Replacing income for a spouse that is no longer here. Replacing security to know that you're not going to have to move from where you are. Replacing the ability to be able to do things. It's not just about survival. It's about thriving. Do you still want to take your kids to Disneyland? Do you still want to pay for that education? Oftentimes those answers become very, very difficult when somebody loses somebody. We've had instances in our time of doing insurance that really, really stick out to me. And it's some of those stories that you don't really want to talk about them more, but you don't really want to talk about those things that go wrong, but they happen. There's an obituary section in the newspaper, and there's stuff printed in it every single day.
Right.
There's a story that I can remember from several years ago where a couple had gotten married and they had moved in together, and he didn't have any life insurance, and he wanted me to sell him life insurance, and it was $28 a month. And he had had some health issues. And when it came back, because of the health issues, it was rated to become a little bit more expensive, and it went to $41 a month. For that $13 a month, he chose not to take the policy. 61 days later, he fell off the back of a ATV in the woods and hit his head, and he passed away, and his wife didn't get anything. she was left struggling with how am I going to take care of these things that we require.
Right.
The best time to buy life insurance is now. There are certain processes that we have in place in our agency and that we're putting in place and that we're going to continue with, where we're automatically going to send life insurance quotes to our customers. Every birthday, every time there's a claim, every time something comes up that you really need us for and that conversation comes up, we're going to send you the quote for that coverage, because of all the policies that we sell, what's the last one you want to make sure you got in place? And it's life insurance. It's the most vital thing you can have.
It sounds to me like people don't want to think about life insurance because they don't like to think about their own deaths. But if you have a family that you care about, it should be on the top of your list. Kevin, do you have anything you want to add?
We have the full intention of making it so that the life insurance is in front of you. It's not going to be because it wasn't offered to you. That's a very important goal of ours. It's our culture. We want to get it out there to everybody. Even if it's just a small policy, here it is. This is a quote. We're getting it in front of you. We want you to have the opportunity to purchase the life insurance. We don't want something to happen and then we're sitting there saying, well, it wasn't offered.
Right. I often think of life insurance as one of those taboo subjects that nobody likes to talk about, but it's necessary. And I'm really glad that you guys are putting it out there for your customers. So, Danny, I have another question. This is very often asked, and I don't know the answer to this, so I'm hoping that along with our viewers that you could also give me an understanding of this. What is universal life insurance?
Okay, there are two basic types of life insurance. You have term and you have permanent. Term normally has a higher face amount for a period of time for a cheaper cost, but it ends at the end of that time. So if I said, Amanda, you are 19 years old, as young and beautiful as you are, and we wanted to buy you a $125,000 policy for 10 years, that policy may cost you $12, $11 a month. But at the end of that 10 years, unless you make some steps to do something with that policy, it goes away. It's done. It covers it for a specific period of time. Then you come over to permanent types of policies. They are exactly as they're described. They're meant to be permanent. So let's go back to a whole life portion of that first.
Okay.
A whole life, picture a whole life as a train that's on a rail. Everything is exact. There's no deviating from that. Your bill is due on the same time every month. And part of that bill is to pay for the insurance portion of what you're buying. The other part of that bill is to go into a cash value account. Okay, so that cash value account oftentimes will draw interest in different ways, whether it's fixed or variable or however you would choose to have it done. So, and basically the whole entire concept behind it being permanent policy is when you're young and you're 19 years old, insurance is really, really inexpensive. When you're 90 and if you're still alive, that insurance is extremely expensive. So it's easy to afford the term at 19. It's very expensive and unaffordable at 90. So you pay an extra amount above your premium in your earlier years of the universal or the whole life policy, and that goes into a cash value account. As you get older and the insurance becomes more expensive, you're still paying the exact same level premium amount, but the cash value and the interest is enough to still keep your policy in force all the way through to maturity. If you live to be 110 years old, they're going to pay you out a death benefit anyway. Thank God you made it that far. Now, whole life policies are set to be, think of it as rigid. So basically you pay your premium on the same time. It goes in every single month. You could actually have a large cash value amount, miss a premium, and still be in danger without loans of your policy lapsing because you missed that premium. Think about universal as completely flexible. You can pay extra into it. If you've got an extra amount in your cash value and it's Christmas time and Santa Claus tends to steal your payment, you can skip a payment just by letting the insurance company know because you've got extra in that cash value to keep your policy in force.
So it sounds to me like Universal has more security for the customer. Would you agree with that?
Yeah, well, they're both going to offer that peace and security of having the life insurance. Universal is going to have a lot more flexibility that if I make a mistake, something goes wrong, if I'm in between jobs, if something like that happens, I've got a lot more security that my policy is not in danger of lapsing or canceling because I've got that universal flexibility.
Okay, that sounds wonderful. I think you've already answered our last question between the difference between universal and whole. So we have permanent and term. So let's just go through these one more time just so I have a better understanding and our audience has a better understanding. We're talking about life insurance. Quick definition, what is term life insurance?
Term life insurance is a life insurance policy that lasts for a specific term, 10 years, 15 years, 20 years, 30 years.
Term, small term, permanent means?
Permanent means it's going to last until you pass away or turn 110.
Universal?
Universal is a permanent type of policy that is going to build a cash value but have the flexibility to allow you to miss a payment or to pay extra into it, such as income taxes.
So universal is permanent and flexible, and what is whole life?
Whole is permanent and not flexible.
Whole is permanent and not flexible.
And Amanda, these plans can be used to do things that are unimaginable to most people that are just thinking about life insurance. Let me give you some examples. You can buy a universal life policy, fund it with extra money, let that cash value build inside of it on a tax-deferred basis, and then use the extra cash value that's in it to offset your retirement expenses.
I can use the cash value?
Absolutely. Absolutely. If you could purchase a permanent policy at your young, beautiful age of 19, wait till you're 65 years old, and let's just say that your financial condition is to where you don't have as much of a need for life insurance, you can cancel all but a portion of that policy, cash out the cash value that you accumulated, and use it for expenses that you might, to pay off the house so that you're debt free, to go on a vacation, to make repairs, to pay for your grandchildren's college. That money is your money. Or you can leave it there just to continue to build, however you would choose to do it. So I have a question for you.
Sure.
How much life insurance should you buy?
I have no idea.
Okay, so here's the thing. In our example where a young couple was purchasing a house, most commonly what they'll think about is how much does it cost to pay off the house. So if you're in a situation where your wife and your husband or whatever, and you're looking at how much life insurance should I buy, how much debt is owed on the house. So if you buy an amount to pay off that house, well, yeah, you've got the mortgage gone, but what are you living on for the next 2, 3, 4, 5 years, 10 years, 15 years? Most commonly, some people will purchase an amount of life insurance, and I recommend you doing whatever it is that you can do. The most that you can get is what you should have, because no insurance in the world does you any good if it's not affordable. If you can't afford to pay for it, it's never going to get there anyway. So even if it's just a $25,000 10-year term, at least you have something. And let me throw in another benefit. You have that $25,000 10-year term. You get 6 years into it. You get diagnosed with a horrible disease, or you have a heart attack, or something happens that you become uninsurable. You can convert that to become permanent insurance without having to prove that you're insurable,
wow,
without having to go back through paramed exams or medical exams or questions, even if you have some of these dreaded diseases that would cause you to be uninsurable.
Wow.
But so here's what we would commonly say. We have tools of looking at how much life insurance you should get. Usually, as a general rule of thumb, it's 7 to 10 times your annual income.
Wow, 7 to 10 times your annual income. I would have never guessed that. I definitely would have went with the how much is owed on the house. Well, Danny and Kevin, I appreciate your time. I want to cut us off short here because I know that you guys are going to have some questions after this. I know that you're going to want Danny and Kevin to elaborate on everything that you've just heard. Make sure that you leave your questions and comments in the description, or I'm sorry, in the comments below. We will read every one of them and I'll get back to you. I just want to take a moment and thank Danny and Kevin for helping us to better understand insurance. Don't think about life insurance as just a death policy. Sounds to me like it could be a real good investment for your family. Have a great day.